Welcome to today's live stream. In today's video, we're going to be breaking down the Forex currency markets before the market opens so you can get a head start in regards to Forex profits for the week. So if this is your first time on today's live stream, it's the first time on our channel, my name is Israel, and here on this channel, we focus on helping you do one thing, and that's make Forex profits. So make sure you subscribe to the channel if you are new, hit the like button if you like what we're talking about today, and let's basically jump straight into it. Right, so should be able to see my charts right now. You should be able to hear me clearly. If you can hear me clearly and you can see everything, just leave a comment in the comment section saying, yes, I can see everything clearly. I can see your charts. We're basically going to jump straight into the charts and basically do our analysis for the week. So again, for those of you who are new, for those of you who are joining me live in real time, thanks for tuning in live. If you're joining me on a replay, thanks for watching the replay as well. What we basically do on the weekend is we basically open up the charts and we start basically breaking down what the markets are actually going to do. We do this ahead of time. If you want to watch previous live streams, you can go back to last weekend and you'll see basically another live stream similar to what we did then, basically. And we're going to basically do the same kind of thing today. We break down the charts. We try and get ahead of the market in a sense. We want to basically preempt what the market's going to do. So we want to do all of our analysis at this point. When it comes into real-time trading tomorrow, the second day of the week of the trading week, third day of the trading week, fourth day of the trading week, fifth day of the trading week, we're kind of prepared and we're ready to go. So first things first, what we're going to do is we're going to look at the Euro Japanese yen, and we're basically going to break down what we think is going to happen. So what I advise you do, I mentioned this on last weekend stream as well. Okay, it doesn't have to be this. This is just a little notepad I have, a little journal that I write information in. It doesn't have to be that. You can use a phone, you can use a tablet, you can use any sort of note-taking device to basically jot down your thoughts. So you can literally write down. You can say, well, okay, cool. I think this market's going to go down, or I think this market's going to go up, etc. And based on that, we write it down in our journal, whatever it is, and we just come back to it during the week. And we're looking to trade off the same analysis because these are the times when we're going to be least emotional. When the market's closed, when you can't see the ticker, the buy and sell ticker going up and down, like making you mentally, even if it's subconsciously, think to yourself, okay, what's the market doing? Is it going up? Is it going down? Emotion has a big effect at that particular time. Now the markets are closed, the markets aren't open until this evening, basically, here in the UK, or late afternoon, early evening in America, etc., or early in the morning in Australia. Okay, so we kind of talked about the three major time zones, okay, across the world pretty much. Then we're making logical decisions. So the Euro Yen last week was interesting. I believe I said I thought the Euro Yen. Well, let's start with the pound against the dollar actually, because this is what we talked about first last week. So the Euro Yen, the pound against the dollar, we talked about the market moving down. You can see some of the analysis that we drew on from last week. Now, if you didn't watch any of our streams through the week, okay, I advise you go back on our channel, watch them after this stream, because what I'm basically about to break down in today's stream in regards to this currency and some of the other currencies as well is I broke this down significantly during the week, and the week's streams. Basically, I was basically saying that although the market didn't go where we necessarily thought it was going to go, it still provided opportunities. So we're looking at the daily chart. This is what you can see here. Right here, we're looking at the daily chart right now, and we start with a higher time frame always because we want to kind of gauge what the market's doing. This is trading view for those of you who don't know. If you want to basically kind of mimic what I'm doing, there's a link in the description box. You can get a free trial basically to try it out, all that kind of stuff, and you can use the free version. You can upgrade if you want. It doesn't matter. Okay, both of them are really beneficial either way. All right, so you can see there, this is the daily chart. So now what we do is we want to analyze what the market's doing. So last week we talked about this huge drop in price, all of this activity over the last couple of days, okay? And we said, okay, cool. The overall long-term move of the market is down. How do we know that? Well, if we go to a higher time frame, even higher than the daily, And if any of this stuff that I'm saying right now makes sense, let me know in the comments section. Say, yes, this makes sense. If something doesn't make sense, let me know in the comment section. Even more so, say, look, this doesn't make sense. Can you kind of explain this? Like, what are you doing? How are you doing this, etc. So I can obviously give you the most value here. All right. So let's go to a higher time frame, and you can already start to see this is all going back to March of last year. Okay. You can see the date all the way across the bottom of the screen, bottom of the chart right here. Okay, all the way here. So just bear that in mind. And all the way back to March. Now, what's interesting is you can already see the market has been moving down over this period of time, right? If you can see that, yes, I can see how the markets, from what we can see, started up here and has gradually been moving down. Okay. The one thing I always like to highlight is, look, even though the market is going in one direction, look, this doesn't change the fact that price still will go in the opposite direction. We talked about this quite heavily during the week because people are taking profits. Okay, people are taking profits. So no matter what way the market's going, even if the market's going heavily down or heavily is surging upwards, there's always going to be the opposite happening. There's always going to be sideways action at some point because the market has to like reverse. It has to retrace, is the common phrase that we use in regards to techno babble. But just to keep it simple, a retracement is just, look, price is moving back. It's moving back against what the momentum is basically taking it. That's because people are profit taking, people are like jumping out, all these different. So just bear that in mind. Okay. So we don't really need to go to a higher time frame than this. This is a weekly. Every single candle here, this red candle right here, this green candle next to it, this red candle, each one of these candles, we call them, is a week's worth of data. So this is the whole week. Last week's candle, this one green candle right here, this is the whole week's worth of trading from Sunday night to Friday evening. This encapsulates all of the trading activity. So from the market opening to the market end, price moved up, okay, overall. Now we know what way the market's been going long term. Cool. Now what we do is we go to the lower time frames and we say, okay, cool, how can we exploit this? How can we get a better opportunity to jump on all of this? Okay. Last week, this was the intention. It didn't follow through in the exact way we planned it. And coming out of all of this stuff, I was kind of thinking that, you know what, price could easily just keep going down. Now, obviously, bear in mind, like I've said already, people are going to take profits. And it seems like price has come back quite a bit. Even within all of this upwards momentum this week, there has been opportunities to get a sell position. So you always have to be prepared, one, to stick to your analysis, but also two, to be able to pivot. Okay. And in retrospect, thinking about it from this week, although there was opportunities, I think I could have probably talked a lot more about pivoting during the week as well, because what we can see here, this can now come off because we put this on, I believe, last week sometime. Now this has actually been basically alleviated. We no longer need it. Okay? And this is how you update your analysis in real time. But the powerful thing I want you to understand is, going back to last week, we find out which way the market's going. Obviously, the pound against the dollar has been moving down, okay? But we also highlight areas where price is going to be of interest. This is what these two black lines are. These were the two areas where I was looking at during the week, saying to myself, okay, cool. If price is going to get to this area, this is the first level of interest where price may actually stop or may try and turn around. It's not a surprise that in these areas, price decided to bounce off. Maybe more so in these areas, when you're trading with the momentum, you're going to think, okay, cool, price may be bouncing off this region and then continuing down. It didn't do that in this particular scenario. Okay, it decided, you know what, it's not ready to continue with the long-term momentum. It's going to keep going up. Now, we say all this to say, in regards to the pound against the dollar, price continued to move up for most of the week. You can see situations, which is a prime example. I believe I talked about this during the week, as price here in this direction, looking sideways back and seeing that price in the similar area previously tried to move down. Okay, so within all of this stuff, although things are going a certain way, you still have to understand that there's opportunities. Now, this week, what do we say? Well, price, obviously, the overall long term move is still down. Although, when you think about it, you can see that price bounced from the 115 region pretty much, and price ended on Friday evening just under 125, so about 124.50. So we're talking about 1,000 pips, okay, 1,000 pips here in regards to upwards momentum. Now that seems like a lot, but at the end of the day, this initial move down was not to 125 from 125, it was from about 130, 132. So we're talking about the overall downwards momentum here in this scenario was actually 2,000. Okay. So when you think about it like this, it's gone back about half of the distance. Now, for those of you who are into just Fibonacci and all those different kind of things, I'm not going to get into that, but we're starting to get back to some of those key numbers as people like to suggest. Maybe I'll do some videos, some updated videos the coming days and weeks about Fibonacci and those kind of things. But you can obviously see here in the market, price is actually pushing up. But there's two things you can do. You can say, well, and I talked about this during the week as well on the live streams. Again, like I said, go back and watch them as well. You can basically say, okay, cool. I'm still looking for a short position, basically. I know long-term momentum's down, but I'm going to stick to that. Okay. All you'd basically be doing this as a scenario is, okay, you'll be looking this way in most likely if you're going to do this in wisdom. You're going to say, okay, cool. Where are areas previously that price has actually dropped from? The next kind of area would be this kind of area right here, right? So we'd look and say, okay, cool. Price it's about the 126 region, which is 150 pips away from where price is basically right now. And we'd say, okay, cool. If price continues to go up, I'm going to start looking back here and saying, okay, cool. Is price going to now try and tumble again? And that would be a solid area for you to potentially not just trade it blindly, okay? You're going to wait, okay? You're going to wait to see what happens. You'll wait and see what happens before taking an opportunity, okay? It's as simple as that. Now, what else you could also do is you could say, okay, cool. You know what? Although the overall long-term momentum of the price is moving down over the last few years, price right now is still pushing up. So I'm going to continue to now try and take buy positions going up until price tells me otherwise. These are two things you can do. Or the third thing you can do is just literally sit aside and say, you know what, I'm waiting for the market to continue to move down. Now, what I'd say is if you're going to take long positions in these particular scenarios, there's nothing wrong with going against the tide. You can still make money doing that, okay, against the long. What I'd say is just keep in mind if you're going to basically be trading in this direction, even though you know there's so much velocity on the downside, I'd basically say just bear in mind, think about these kind of levels here and stuff like that. And let's just can point to that particular place as well where price seems to have topped out. But basically what you do is, we're looking at a 4-hour chart. You'd go to a daily. Let's take this all off. And you'd be looking at this stuff. You'd say, okay, cool. Like, where are the areas? Now, because price dropped down so heavily, in recent days, there isn't much opportunity to look at and say, okay, this is where price kind of got to and basically sold off from. Okay. What you'd basically have to do is, some people are going to say, okay, cool. This is where price was holding previously as a buying opportunity, and price broke out, right? Price broke out on the downside. So now people will say, which is a common statement, okay, cool. This ultimately becomes old buying strength now becomes strong selling strength. So some people will be saying, okay, cool. 128 would be a potential area for price to come into to basically test and actually buy. That's actually, there's validity to that. But then at the same time, I'm not just interested in basically old buying strength becoming selling activity. You'd want to continue to look and say, okay, cool. Where could price come back? And when you look at a chart like this, you're looking at a weekly view now, and you're looking to the left, and you're saying, okay, cool. Like, where are the areas? You start looking at areas like this, but where are they? They're pretty much back 130. They're pretty much back where price actually came from. So when you start looking to the left and you're saying, okay, cool, like where are these areas that price has shown before that it's likely to drop from or to rise from, and you're not seeing them, then what does that mean? That means in a lot of ways price has free passage. Basically, it's not going to take a lot of activity to get back. Notice how this took 2 weeks, 1 week here, and then this candle was the second week, right? Notice how, look, now price is moving up. This is the first week. So what? Imagine if we have another week like this. Where are we going to be? We're going to be back up here, right? In this region, which makes sense because we're looking to the left and there's no opportunity. Basically, there's no real significant level where price has recently dropped from. These are the levels which are back where price was basically moving down, but in a sort of range, sideways action. Let me take this all off and I'll show you. So look, price, this is the top, and this was kind of the bottom, even though it kind of broke out here, false breakout, and came back to the top, right? And now it's broken out, and now it's basically coming back up. But notice, price was topping out and bottoming out between these two particular regions. But just bear that in mind. So don't be surprised if price continues to move up. So this is where, when that stuff like this, where it gets a bit interesting, because our overall long-term momentum is one way, but there's so much velocity. We'll talk about this if we have time when I talk about the USD JPY, because it's similar on this particular, on that currency as well. But price is moving up. So what I'd potentially do is I'm going to wait. Okay, my personal view on the pound against the dollar is I want to wait. Write that down. And why am I waiting on this candle, on this currency? Because I can make a strong case both ways. We've got the overall momentum down, okay, which is a strong case in itself. Excuse me. But we also have this strong week of trading. Now, I'm not necessarily saying I'm waiting the whole week. What am I saying I'm waiting for? I'm going to wait maybe when the market opens tonight, maybe tomorrow morning, and see what price does. Okay. If price continues to move up, then I may be inclined to start trading that way during the week. If price decides to start moving sideways, so to speak, or even if price starts to basically start moving down, then I may look at it in that scenario and say, okay, cool, I'm gonna now start selling. It all depends what the market does to start week. That's when I'll basically now make my decision and see, okay, cool, this is what I expect the market to do, etc. That's the pound against the dollar. We're gonna wait on that. Okay. So let's do this. Right, so let's put this to the side because we've done this one. Let's look at the Aussie dollar. So same kind of scenario, we do the exact same thing. We want to start with a higher time frame. Last week, the Aussie dollar to move down, but pretty much for the most week, if you go back over the live streams, I really didn't talk about it too much because I really didn't spend much time on it. Because when I looked at all of the currencies, I think I mentioned this maybe on the second stream of the week, maybe probably the second or the first. I was basically saying that there's other opportunities on different currencies that seemed a lot more appealing. So just to give you some kind of good insight here as a trader, if you're learning to trade, one thing I'll say to you is when you're looking at, let's say, 4 to 5 currencies, right? Looking at 4 or 5 currencies, what you basically should do is don't give them all the same amount of time. Don't ever do that. Maybe we can do that now, right now. Why? Because the markets are closed. Because we want to do our due diligence on all of the currencies we're going to be looking to trade this week. For those of you, I'll say this as well, especially if there's anyone new here that doesn't understand the way I do things. I don't waste time, which is pretty much the point I was about to make in more detail. I don't waste time looking at loads of different currencies. I want to focus and hone in on a specific handful of currencies because it makes it much more easier for me, even that I've got years of experience, much more easier for you if you're a beginner, if you're learning to trade, to master those currencies. because you're spending so many like hours, so many men hours and woman hours, however you want to classify or categorize it, looking at these specific currencies and in financial instruments. If I spend time focusing on all different currencies, the pound one day, the dollar another day, the yen another day, the peso another day, all of these different kind of things. I'm not saying there's not opportunities on these currencies, but you're diversifying your time. And even looking at 3 or 4 candles in a week can literally take too much of your time. That's why basically you have to get good at saying, look, okay, you know what, this one, like these ones are providing better opportunities. Let me just focus on these things and stuff like that. So pretty much early in the week, I kind of just said, you know what, let me just not focus on this. Although we had done an analysis on the weekend, it was highlighting this particular area, this black line, if I remember correctly, as a place to see what price will do. Now, price, if we look at it in a bit more detail, you can see that price was for a long part of the week, if I remember correctly, going back to 22nd correctly, you can see what price was doing here. Okay, look, price was bouncing around it, came up, went down, bounced a little bit more, and then eventually for the week went up. And because it wasn't really doing much in the way I anticipated it, I kind of put it on the back burner. Okay, so now looking at it again, this is similar to the pound against the dollar in the sense I said this was something we thought was going down. Now, what this ended up doing is this ended up ultimately trending in a fashion like this. And I mentioned this previously, I've mentioned this for years. We talk about this as well in our Free Forex toolkit. You can get that in the description box as well about the Aussie dollar and other good currencies you can learn. You should trade basically if you're a beginner. But definitely consider getting that in the description box, your Free Forex toolkit. But price, as the Aussie dollar tends to do, trended upwards in a very well behaved manner. This is one of the reasons this is such a good currency to trade, because it's generally very well behaved. Okay, so if you think about this, it's not like what we just looked at on the pound against the dollar, where it was just a huge uptick, and we're wondering, okay, look, like how's price moving up? Notice how it's gradual. So similar to the pound against the dollar, I'm going to be waiting on this again. One, because I waited last week, okay, pretty much early into the week, but also because it's in a similar position. So my bias is to go short, but then at the same time, if price starts opening up and continues to move up, then all I'm going to do is say, okay, cool. Right now, these are daily candles. If this was like a 15-minute candle, like price moved in the opposite direction for a day, then I would disregard it. If price moved in a certain direction for like a day and a half, 2 days, I might still disregard it. When we're talking about, look, a whole week's now worth of trading, 7 days or 5 days, 1, 2, 3, 4, 5, we've got 6, we've got 7 trading days basically of upwards momentum. That's something you take into consideration and you say, cool, these could be the potential beginnings of price actually moving in a specific, like reversing, so to speak. So we wait on this one and we'll just say, okay, cool, let's wait. Let's wait to see what price basically does before we make our decision. The dollar, let me just write this down as well. And I'd advise you to do the same thing as well. And these are kind of things you just review over the week and you say, okay, cool, this is what I thought on the weekend. And look at it again on the weekend and say, okay, what price is actually. Let's look at the euro yen. Now, this was one of the currencies I thought, do this. This was one of the currencies I thought would actually move down quite heavily. Now, this provided probably the best opportunities. I spoke about this during the week in some of the live streams, and I want to highlight this again because one of the lessons I really unpacked, I talked about like 2 trades I took on the euro yen on one specific day, and I was highlighting a lot during the week. I think it was the 3rd live stream during the week last week. Go back on our channel and watch it if after this live stream. But the point I was basically making in that live stream was that, look, your entry is just everything. Your entry is everything. If there's one thing you can really focus on getting the best entry with the least amount of risk. Because when you open up your risk, okay, let's say this is your risk, the more you open it up, the less profit you get, the less profit potential you have. The less, as little as you get your risk, this is now opening up your profit potential even more. They work hand in hand. And the point I was making on these particular trades that I wanted to teach you about was that, look, you can't put yourself in a position where your risk is too big or you're not putting your stop loss in the right place. Because if you don't put your stop loss in the right place and you get stopped out, it doesn't mean your analysis is wrong. It just means that where you put your stop loss is wrong. It was highlighting this, I believe it was in this region right here, if I remember correctly. Let me go back actually believe, sorry, it was probably here. Price basically came up, did provide a good sell opportunity, but the entry I actually took on the trade was wrong. So because the entry was actually wrong, what I decided to do on that particular trade was I now put my stop loss in the wrong place. So when price actually knocked me out, it didn't breach where my stop loss should have been if I was literally doing things the way I normally do. And then when I basically entered the next trade, if I remember correctly, the risk, because the entry was bad, the stop loss had to be so much further away. Once the stop loss was so much further away, because I'm going for at least 3 to 1 on every single trade, the reward needed to be somewhere deeper. Whereas if I took the trade entry properly, which is something I'm going to focus even more so this week, say, look, you know what, put your stop loss in the right place, get a bare entry as possible. Now all of a sudden your entry isn't risking this much, your entry is here and you're risking half the amount. Now all of a sudden your target doesn't need to be down here. Now your target can be up here and you can basically get your profit, etc. Okay, so if you think about it from that perspective, entry is vital. Now this is another similar one. The only difference with this is I'm not necessarily planning to wait on this. Why? Because we've got, let's show you this from this perspective. Euro yen, last week I thought it was going to go down. This is why. Going back to 2018, a bit uncharacteristic, to be honest, for the euro yen, but it's been moving down in a generally well behaved, manner. Now, although last week price did try to move up, I mentioned this at the top of the stream, there were still opportunities to trade in the direction of the long-term momentum. Okay, and that's exactly what price ultimately ended up doing. Okay, they did give you an opportunity. So now we go down again lower, and let's move this back. So notice what price did. We're looking at a 4-hour chart, so you can see this. Okay. (23rd). Okay. And notice price, we had these two lines on. Price was bouncing between these two regions. Now price, again, this is an opportunity. This is the opportunity I was talking about. Okay, that I was just mentioning. But look what price did. Price broke out, and what I just talked about previously on a previous currency, look what price is doing. Where there's been a lot of sell activity previously, now price is trying to turn this into buying activity. Okay, but don't be necessarily still looking for a short position on this currency. Why? Not only because it provided opportunities to sell, good opportunities to sell. When we go down to lower time frames, notice what price did to end the week. Okay, which is this was the second opportunity we talked about right here. We talked about price bouncing off of this particular region, which was a key area of interest where price was likely to drop from. Okay, when we talked about this particular trade opportunity, we'll show it to you specifically again where price moved down. And I spent the last day of the week's trading session talking about how you could get a potential good opportunity in here with a stop loss above going to lower levels. Now this is why, because ultimately price moved down to this particular region. Price topped out in the end. Although it came on the last couple of days of the week, price topped out. It found an area like I was talking about in the pound against the dollar. you have to wait and see where the market's going to try and reverse. And this is what I believe was happening. Okay, so although there was opportunities earlier in the previous week, okay, and I'm not saying this area here, I'm just highlighting, going back, okay, it topped out, moved down, and subsequently he's been moving back up. And one thing we talked about last week is, to end the week, I was basically saying, look, don't be afraid of this, that price is actually moving back. If price now comes back and starts breaking this area right here, okay, cool, then I might be considering, okay, cool, let me now continue with an up. But until that point, let's say for example price comes here, moves sideways, then I'd personally be looking as everything pans out. And again, this is a nice time for me to say, this is not financial advice, this is my own personal opinion. Okay, I'm not going to take any part of your profits, I'm not taking any part of your loss. Same way you're not taking any part of my profits, any part of my loss, etc. Okay, just this legal disclaimer out there. So if price comes into this region, I'm going to be watching to see, is price going to do something like it did here? And if it does, then I'll be happy to basically find a sell position. We're talking about the 121 region. Basically, if you're going to put your stop loss in the right place, it would make sense to put your stop loss over this particular region, similar to like what happened in this particular region. And look, fair enough, yeah, I'll say this as well. Let's say price comes to this region and you miss it, price bounces. Don't be afraid. Don't feel like, oh, I missed something. You know why? This is a good way to segue to answer the question that I can see here from Sycamore. Okay, I'll answer your question here right now. Okay, let's do this. So there was a line on from last week. Okay, so now let's see what happens. This is the 121 A10 region, right? I'll show you just quickly upwards before we go back down. Take this line off now. On here. I noticed this. Okay, going back to the 17th, 20th of February, right? What happened? The last time price was in this region, what did it do? It dropped, right? The time previously, what did it do? It dropped, right? So is it a surprise that when price came back to this particular region, it dropped again? It shouldn't be. If you're following what I say, these are the things you should be scouting out ahead. Okay, price is going up. Okay, cool. While price is going up, but we know the long-term momentum of this chart is down, right? We know the long-term momentum is down. We just discussed all of this stuff previously. So where is it going to reverse? Let's look back left. Let's look back here and see, okay, where can we see? We can see things here on the euro yen quite clearly. And up until this point, price has not broken this region. So this area is still valid. So Sycamore's asking, okay, what's the best time frame for entry? We did a video about that. It's actually in the description box. You can watch it after this live stream. But to give you just real-time analysis, look, I do all of this analysis in the higher time frames to now open up the 15-minute chart and look for a trade opportunity. Okay, and this is what we focused on in the last stream of last week. Go back and watch it on our channel after today's live stream, because we focused heavily on this second opportunity to take a trade on the euro yen, and why all of this is a good thing in regards to when price is moving up heavily or moving down heavily. Whatever way the market's going, if you ever want to jump onto an opportunity, this is the kind of thing you want to see. When price gets nice and tight, it gives you an opportunity to jump on the bandwagon. Don't be one of those lunatic traders that's basically just trying to short as the market's moving down, not knowing where your stop loss is going to be. Okay, when all of this stuff happens, it gives you an opportunity to trade and put your stop loss in a reasonable position with a minimal amount of risk. Okay, but your reward, the potential reward you have, is so much greater. So even though price now decides to come back, that doesn't matter, because if you've done the right thing in here, then your trade would probably likely have been closing out somewhere like here or here, okay, and you'll be out of the trade easily. About this, about the whole 3-to-1 thing, right? Over a little. Even before all of this stuff's happening, we're saying, look, we need a trade with 3-to-1. Go back and watch the video, the last live stream of last week. We broke down how, based on doing all of this analysis, we can put ourselves in a position where, look, 3-to-1. See where 3-to-1 is? This is 3-to-1 risk to reward right here. 4-to-1 would probably be about here. 5-to-1 would probably be about here. So the kind of trades I'm talking about, you trying to take, look, that's even 5, that's 6-to-1, 7-to-1 is down here. Okay, do you see how that makes sense? We've done all of this stuff in real time before the markets are open to do analysis like this, so we can actually piggyback off these opportunities if they arise. If they don't work out, everyone loves to talk about profit. What about loss? Okay, I mentioned some of the losing trades I had last week. If they lose, what happens? Well, we got it wrong. Okay, cool. We got stepped out. We get stopped out. You're only going to be risking 2% maximum. I don't tell you to risk more than that. This isn't one of those things where I say, look, risk big portions of your account. Okay, I say 2% or less. But if we're talking about you risk 2%, okay, we're talking about at least 3-to-1 or 1-to-3 return, however you want to categorize it. Okay, risk to reward. We just showed you 3 was up here. This was 3 about here. 5 was here. This is 7. Okay, I say, look, you need to be at least here. If you're taking this trade with 2% here, you need at least 3. So if you're going for a trade on 7-to-1, I wouldn't advise you do that if you're a beginner. Even me, like, I don't like be trying to attack trades on an intraday looking at with 50-minute entries for 7-to-1. 3-to-1, 4-to-1, 5-to-1 is cool for me. Okay, 5-to-1 should be cool for you, because anyone will gladly, well, most people should be gladly risking 2% in order to make 6% or more. Okay, because if you're trading with 1,000 in your account, okay, 2% of that is what? It's $20, right? We're talking about 6% plus, right? So what's that? That's $60. $60 at least. So look, you can be wrong 3 times. What's gonna happen? You can be wrong 3 times, and what's gonna happen? You're still gonna be fine. You could be right 33% of the time. 1 out of 3, you still haven't lost any money yet, because you're making at least 6%. Okay. So you think about it from that perspective. I'm going to be looking to see what happens on this particular currency to go down. Okay. And the reason we highlight this particular area right here is because once we know the area, we've talked about this again. I don't want to go over it again in today's stream since I covered it so closely, but go back and watch the last stream of last week, basically, where I basically break this down. We've talked about how you can even get down to a lower time frame, not because you're basically trying to trade, okay, based off these time frames, but because you're basically taking the information out from the higher time on the lower time frame, etc. Okay, so just bear that in mind. So I'm going to be looking for opportunities on this again to sell, and as the market unfolds, I'll know in the back of my mind, look, this area right here is going to be of interest to me. Let's say price just starts dropping straight away. Okay, cool. This now will become a level of interest to me. The market opened and just sold straight away. It's not going to be as strong as this particular region because this is going back to months and months of activity. But I'll be looking at this saying to myself, okay, cool. Is price going to go sideways here and then drop? Is price going to continue moving up, etc.? But I'll know at the back of my mind from a daily perspective, this area right here has strong selling power. So do you think I want to buy into all of this strong selling power? Or do you think it makes sense to sell into strong selling power? You let me know. What do you think? Excuse me. So the euro yen, as I write this down, euro yen is a sell for me. Let's look at let's look at the euro. Okay, let's look at the euro. Let's look at the euro and see what the euro is doing. All right. So if you notice, a lot of these currencies have been very similar. This is the euro dollar. Let's look at the weekly. Let's go even higher. Okay, we're looking at a monthly chart. This is the last 9 years of trading activity. Moving down, right? For the last 9 years, price has been moving down. 2015, for 2 years, price was in a range, topping out, bottoming out between, is that 115 and 105, right? 2017, it said, okay, you know, enough's enough. Broke through the range. Notice this. It broke through the range, but didn't stop the downtrend. Okay, remember, profit taking, going in the opposite direction is not a bad thing. What does it do? It starts providing you opportunities. Okay, cool. Why did price turn around here? Let's look to the left. Initially, we can see that the last time price was here, price was moving down, started moving slowly a little bit, and then started dropping down heavily again. Okay, cool. What about the last time before that? Now we go back to price basically being a buy zone here previously. Now it's actually turned into selling power. Okay. And if we go further, let's do this. We go across, let's see. Okay. Price was buying 1, 2, 3 times, buying off this region. Now all of the buyers are out of this region. Now people are selling. The price has been moving down, but look at the last few days of trading. Look at the last month. Look at what it's showing us right now. This candle right here, there's some upwards movement, but there's been some downwards movement. That's what we call indecision. That's known in the trading world as a doji candle. For those of you who don't know the Forex language, a doji candle, all it means is just indecision. And the candle shows you that, look, the tail on the upside is moved up, but it's also moved down. But all it left behind is this little body in the end. It just moved up a little bit overall, even though it pushed up so far in the month. It's pushed down so far in the month. We're not early, we're late in the month now. So for the month of March, the euro dollar has been indecisive. I don't know where I'm going. That's what it's basically been saying. In the midst of a huge downwards momentum, price has said, you know what, I don't know. And look how much activity is covered. If you look at the top of this candle, you look at the bottom, look how much activity is covered. Going back to pretty much 2019, here was the last time where it reached to. And literally, price hasn't been this low since 2017. Okay, when price was basically caught in between this range. And a range, for those of you who don't know what a range is, that just means the price is moving sideways. It's ranging between two areas, basically, between these two particular levels. Okay, price bottomed back out, so it came back into the range, and it's bouncing between the two. So just bear that in mind. Okay, so if the market is undecided, what should you be? If the market is showing you over the last month, I'm undecided, what should you be? I would think it would make sense for us to be undecided too, right? That's what I would think. So let's look at this. Let's go down to a lower time frame. Let's go to a 1 hour chart. Even before we do that, let's look at a 4 hour chart actually. Let's see, let's go back to real time. And let's see what price did from last week. So I thought this market was going to continue down. There was a lot of negative bias on a lot of these markets last week. So my mindset was, okay, cool. Most of them are long-term down. There's a lot of negative news. Let's just see if it continues. This provided opportunities. We talked about this early in the week. Okay, the opportunities. We had actually drawn up levels. Okay, look, if price gets to here, this is the kind of area I want to trade from. Price basically hit those levels early in the week. Okay. And then subsequently continued up, right? Overall, what did price do in the end? Price trended up. Cool. So now, similar to some of the other currencies we talked about, I believe we talked about this on the pound against the dollar. We talked about this on the Aussie dollar or the euro yen. Price is going down. So let's look this way. Like where? Like where can we see price moving down? Well, this is a level of interest, right? This is 112. Right here. You follow it all the way along. 112. Last time price was here, price moved down. Does that guarantee price is going to move down? No. But what are we going to do? We're going to watch, right? I want to watch and see if price pushes into this level. What does it do? Does it provide some opportunity for price to move down? If it does, what, like, let's take a sell position. Okay. Because there's nothing wrong with price doing the opposite, remember, of what the overall momentum is. Yes, you can be trading this if you want. If you're going to trade up with this market, just bear in mind, think about 112. We're at 111, 30, 20. That's where, at 111, 32, 0. That's where price closed out. But just bear in mind, look, 70 pips away, the last time price was in this region, this is what happened. Okay. So just have that in mind. Don't be thinking that, you know what, let me put a trade on, I'm going to have a target up here. Not to say it wouldn't work, but in trading, what I like to do is I like to do an odds. I like to put the probability in my favor as much as possible, because there's so many things already for the retail trader. Retail trader is just someone who trades their own money from home or something along those lines. There's so many disadvantages for us as retail traders. We don't want to give the market, the big institutional players and the people that do all of this stuff. We talk about this more in our free on-demand training. You can watch it anytime you like currently. It's in the link in the description box as well for you to watch after this stream if you want. But bear that in mind. If you're going to trade this way, just think back to these areas. Think about what price was doing. So bear that in mind. So 112 would be somewhere where I'm going to be saying, okay, cool. What's price doing in that particular region? Is it going to bounce? So we still look for sell positions. If we start seeing price go through these regions strongly, okay, cool. I have no problem switching, because now this is not only 1 week, and this isn't like an aggressive week. This is, if you compare how price is moving up here to how price is actually moving down, it's not that significant. It's only gone half of the distance, right? Half of the distance. There's still all of this potential left. So it's gone with about half of the momentum, half of the velocity. So from that standpoint, if price now continues to go up, okay, cool. Now we can start thinking about those kind of things. But if price does what it's most likely to do based on long-term momentum, it says, you know what, okay, I'm ready to continue now going down. then we can make that decision. But this is where looking at the daily comes into play again. Give you the better view from a weekly, in fact. Take these all off. Do this. And all we're basically doing here, we mentioned, I think, let me just put them on the round numbers, because I mentioned 115, 105. What we're basically doing is we are remembering that 3 years ago, what did price do? Price was in these two regions, and what was price doing? Price was bouncing between them. Cool. The price has spent a bit of time coming down, going up. Now it's coming back into this region. There's no harm in price trying to top out here, because price tried to do that previously. Okay, cool. Is price going to continue down? If it is, are we going to look at 105? Now again, if price comes back higher, we know, okay, cool, even the last time price broke out, even though it didn't go like continue up like this, we know that, okay, cool, at least 125 is where price may be able to go to again. Maybe it might go to 120, but we have areas in mind where we say, okay, cool, last time price went to 125. If price is going to continue with the downward momentum, maybe it's going to turn around at 120. Maybe it's going to turn around at 115, etc. These are 500 pip waiting markers. The way prices are moving these days, that doesn't even mean too much. Okay, price is moving 100, 200 pips in a day, giving us a lot of good opportunities. So from that standpoint, it does provide you different opportunities. But I'll be looking again for a sell position on this particular currency. And it's really and truly just about waiting to see what happens. Like I said, price is actually moving up, or was moving up for a lot of last week. Now it's just about seeing what price is actually going to do. Where's price going to turn around? We mentioned this particular region here, 112, etc. What I'd do is I'd say, okay, cool. Like, what is price going to do? Move it up a little bit. What are we doing here? Let's go closer. We've got our area right now, right? This is the area we've drawn on for all of our analysis. Based on all of this, right? All of this activity from previously. Last time price was here, price dropped, right? Right. Now let's see. Let's see what price does in this particular region. Price push into this particular region and provide some sideways action. If it does, that provides a good opportunity. Now, one thing I will highlight as well is just within what all the stuff we're talking about here, price has been trending up, right? So let's say, for example, price keeps trending up. Price says, you know, it's not ready to drop yet. Don't be surprised if price pushes into this region, provides you with a sell opportunity, a viable sell opportunity, bounces down, and then continues going up. Why wouldn't I have a problem taking a sell here if everything lines up, in my opinion? Remember, this is my opinion, it's not financial advice. Because we've got long-term momentum for the last nearly 9-10 years moving down at least. Plus, even within the trend, what happens in the trend? What happens when the market's moving one way? People take profits, right? So how many things are going to be working in our favor? We've got the long-term momentum, which is 1. We've got this previous piece of action here, which is 2. We've got price moving up into a very well-behaved trend-like manner. This would be a key kind of area for price to reverse and profit taken, right? Now we've got 3. Where potential targets lower down below. All of these 3 to 4 things are giving us opportunities and saying, okay, cool, profit taking. 4. You see how we put all of these pieces together to try and make a smart trading decision. Again, and all the thing is, watch this happen, and we'll just it doesn't cost anything right now. All we're doing is analysis. We're thinking about this logically once why the market is closed and saying, okay, cool, this is how we're going to do it. So if price comes into this region and moves down, cool, that's fine. If price moves into this region and goes through, cool, it's fine. We got it wrong. Don't be afraid to get it wrong. The only time you should be afraid to get it wrong is if the thing you're trying to get in return isn't worthwhile. It's either you're not getting something big enough or the risk that you're putting on the table is too much. Okay, that would be the only reason why, you should be afraid to make a decision. Okay? So, if you even take a trade from this region, if everything sets up for you personally, you say, okay, cool, you know what? Although Israel told me this kind of stuff, from what I've been doing, from my analysis, I think this makes sense. If you take this trade and you get stopped out, you'll only be risking a small amount of money anyway. Okay, it should be small risk. But either way, because the returns are supposed to be so good, let's see. This is a potential short position, right? When our stop loss to go probably likely somewhere up here. This is rough, by the way. What I mean by that is we're doing this looking at a 4-hour chart. I've already said in today's live stream, talked about this in our best time frames to trade videos in the description box for you to watch after, that this is a 4-hour. This will get even better as we go down into lower time frames for an opportunity. Okay, so I say this is rough. So look, price comes into this region, provides a potential good opportunity. Okay, talking about 40-45 pips, right? Potential. We need 3 to 1 based on how I trade. 3 to 1's right here. Look, risk to reward ratio. Do that again. Risk to reward ratio 3. This is where 3 to 1 risk to reward ratio is. Right here. Price bounces in here, then moves down. Is that possible? It could happen, right? But what we do is we take this region, and with now, like I kind of just showed you previously, we'd go down to a 15-minute window. We'd say, okay, cool, what's the price actually doing, etc. Is it providing a good opportunity? that, and then would actually make a decision. Okay. So this risk right here would actually turn out to be 20 pip stop loss if we can get a good opportunity in real time. And now all of a sudden, can you see what happened to the risk to reward? Can you see what happened to it? Just because we moved our entry. Look at it now. Same target zone. But just because you've got the entry right, you've nearly tripled your risk to reward because your entry is premium. You've cut your entry in half, that automatically opens up more profit potential. This is what I was talking about on the last live stream I did. Okay. This is why doing all of this stuff in real time on the higher time frames is priceless. But when you now go down to a lower time frame to try and exploit this information, can I say exploit? It's not. I've said that for years. You exploit it. I say that has negative connotations, but the point I'm making is we're using the information from a higher time frame to the best of our abilities on a lower time frame to get a trade opportunity. Nothing has changed. The stop loss has stayed the same. The potential stop loss, a potential target has stayed the same. The only thing that's changed is your entry. Your entry went from about here to about here. You went from 40 to 45 pips to a 20 pip stop loss. That's all that changed. Okay. Your risk to reward has now opened up. Now, that doesn't mean go for 7.8% risk to reward. You can if you want. But what that shows me is, look, now if this trade pans out, look, 5 to 1 all of a sudden seems a lot more realistic. Because why? Because it's closer, right? Look at 3 to 1. 3 to 1 becomes even closer. You do this right, 3 to 1 is just below. 3 to 1 is just below the actual yellow area. And you see how this actually all makes sense when you actually line this all up together. This is stuff we're doing now when the market's closed opposed to when the market's open. Okay? So what I'll say is that's probably a good place to segue and just say, look, this is what we try to do on the weekend. We spend a lot of time doing this stuff so we can basically highlight what the markets are actually doing in real time. I mentioned this several times. I want you to get this into your head. Do this stuff when the market's closed, so when the market's opened, you're not going to allow emotion to get the best. There's 2 things you should do every single weekend. What we kind of just showed you right now: analyze the markets, write things down. Okay. Throws a downer. The second thing you should do is, which is what a lot of people don't like to do, is, and this is another reason why a lot of people lose money, this is why it's important for you to do this, is this right here. Okay. You want to look at the week's worth of activity for the trading markets. What is scheduled to come out during this week? Okay. The clocks went forward here in Europe. You want to be looking for red first and foremost. So we've got some red news on Tuesday coming out of New Zealand. We've got some red news coming out of China. Okay, important news. We've got red news coming out of America on Tuesday. The most important thing that happens every first Friday, or most first Fridays, customarily of the trading month, is what we like to call non-farm payrolls. Biggest news event on the scheduled calendar. These are the kind of things you have to know. So on Friday, before this time right here, 12:30 p.m. UK, that would be 7:30 US, 10:30 at night in Australia, or 9:30, depending on what the time difference is. You don't want to likely be trading in that morning. You want to wait until after. Okay, so just bear that in mind. Check out the calendar right now in the same way we look at the chart and say, okay, cool, this news is going to come out on this day, so I need to be prepared for that. You should do this every day as well, in the morning before you start trading as well. Okay, something that's really vital to you as well. So Where we break down the charts, we talked about our obviously on-demand workshop. That's something that's really beneficial. We get into all of this trade activity even more, so we talk about a lot of winning trades and all those different kind of things and how you can actually utilize it as well. We obviously have a Forex program which we go into this stuff in more detail as well. You can consider those things as well if you want. We also do one-on-one sessions as well if you're interested in that as well, if you want me to do this more so with you on a personal level in real time. But on that note, I think there's no questions. I'll pretty much wrap it up. Look out for our next live stream tomorrow, God willing, and hopefully we'll be able to help you make some more additional Forex profits, or start making Forex profits for you if you're not doing that already. So thanks and take care. Hit the thumbs up button if you like what we talked about. It goes a long way. It tells me that this is what we should be doing more of. It tells YouTube that we should promote more of this stuff from this channel. See you again next time.